It's not profits that's causing the stock market to grow so much. It's inflationary.
Here's the chart I was alluding to, if you don't mind, just kind of illustrated to your viewers here. So this is the S&P 500 divided by the M2 money supply. So the M2 money supply is, you can think of it as the amount of how much money is sloshing around into the system. The more money we print, the more the money supply grows. Now, when you control for the money supply, the S&P is not at an all-time high. The S&P only hit an all-time high in 2000. When you control for inflation, when you control for the money supply, even when you look at it priced in, let's say, gold. So if you do the S&P priced in gold, because gold is money, it's nowhere near an all-time high. Gold is has actually outperformed the S&P.
All right, I'm with Danny at Capital Cosm. Check out his YouTube channel. Today, he's going to give us a geopolitical breakdown and tell us how it affects our investment portfolio. Thanks for being with me today. All right, what should we be watching out for as investors right now?
Hey, Gary. First of all, thanks for having me on the show. I'm watching your channel grow as well. Very interested in your success as well. But as it relates to how we can tie into the geopolitics into our investment portfolio, I think it's very critical to have a solid understanding of the geopolitics, because when you look at a lot of these markets, a lot of them are indeed politicized. So being naive to the geopolitical undermarking behind everything going on in the world, it kind of leaves you vulnerable. So I think it's very important, very significant to have this understanding, because we are in a cyclical switcheroo, let's say, from the current monetary standard. Over the last 80 years or so, we've been under this Bretton Woods style. Now, we did see the gold standard removed in 1971 through President Nixon. And since then, it's all been fiat dominated by the US dollar, the US hegemon. And that's slowly coming to an end. And you can see it when you look at who's buying the gold. Now, some of your viewers may or may not be aware, but the price of gold has spiked, has surged over 50% in the last 18 to 19 months. But there's very little claim, very little noise that you hear about in the mainstream media. You don't really hear much about it on CNBC or Bloomberg or any of these other talking heads, mockingbird media outlets. So why is that? It's because you're seeing these central banks, these governments begin allocating more and more into gold and precious metals, in some cases silver, because they're starting to see the end of the US dollar hegemony. And you can kind of see this as well in the bond market. The bond market, if you look at a chart of the 10-year yield, we've been in a, 45-year bull market in US bonds. And that's been seemingly unwound since 2022. Something broke. They screwed something up in 2022. And we can look at a chart of this if you'd like. Something happened in 2022 where you look at bond yields. They've been coming down, down, down since the 1980s. And then they bottomed sometime in 2020. And then in 2022, they started cutting rates. But what's interesting, the Fed started cutting rates. But what's interesting, the 10-year yield was seemingly unfazed, which is telling, because the Federal Reserve, that is able to manipulate interest rates on the short end of the yield curve, which is the Fed funds rate, which is the interest rate that they control. When you hear about Jerome Powell cutting interest rates or hiking interest rates, they're controlling the short end of the yield curve. That's like the 2-year yield, et cetera. But the 10-year yield is a different beast. Typically, it should move in tandem with the Fed funds rate. But in 2022, when they began cutting rates, hiking rates, and then in last year, when they began cutting rates, they've lost control of it. The 10-year has remained unfazed by these Fed funds rate cuts. And that's telling, because when yields go up in bonds, that means that the price is going down, or vice versa. When bonds go down in value, which is government debt, they need a greater yield to attract investors. And so what we've been seeing is this different phase in the globe. The last 40 or 50, it's a breakaway from the last 40 years. It is indeed different this time around. Now, this is a term that's, us as investors, we've been told to stay away from. You can never say that it's different this time around. But if you look at the charts, it certainly is. And I'm going to go ahead and share what I'm talking about here. This is the 10-year yield. And I'm going to share my screen here in 5, 4, 3, 2, 1, go. There it is. Oh,
Oh,
and
okay.
so you've got the 10-year yield on the bond market. So you can see we've been coming down since the 1980s. And we crashed in 2020, as much everything did. That's when bonds got a big surge. That's when they got a huge bid because the stock market was falling. So when the stock market falls, capital typically rotates into bonds, et cetera. But since then, you can see we've broken out of this. If your audience is familiar with technical analysis, we've been in a downtrend, and we broke out of this 40+ year downtrend
Yeah, that's
sometime here in
crazy.
2022. They screwed something up in 2022 effectively. Some might say it's the start of the Ukraine war, and when we froze Russia's assets, and kind of got into this journey of where the rule of, where America, which was a big value proposition of having your assets in America, was that you would see it abided by the rule of law. And once we
Hmm.
seized Russia's assets, that's when it became apparent to the rest of the world that your assets may not be safe in America. And that's when you started seeing BRICS domination, BRICS beginning to expand out. They added in like 10 or so members the following year. They've been talking about this new BRICS settlement currency as well since then. So that's really what's been going on lately. And all of these guys know. I mean, you're seeing it in the gold price. Here's a quick chart of the gold price. I mean, this thing has been ripping higher. I mean, this is a 70-year plus chart of gold. You can see, I mean, this is where we're at now. We're at 3,300 and some change, 3,348. It's been grip it and rip it since late 2023. And I think the next big one is silver starting
Silver.
to break out as well, right? So this is a long-term chart of silver. And you can see there's this technical pattern that's often cited in technical analysis. If you look at this pattern here, you've got a cup and then you've got a handle. And from a technical analyst point of view, typically what comes after that is a huge surge up for the asset. And we've been, you have this resistance here at $48, $50 or so. But you can see we've been
Yeah,
climbing
that's gonna.
fairly. Yeah, go ahead.
Yeah, that's gonna break that resistance point. It just looks like it is. Um,
Yeah.
okay, let's talk about gold and then bonds then, because gold's an interesting one. I had Ron from Ron's Basement on, and when I had him on a few months ago, and I was like, "Hey, gold, it's is it gonna keep rising? Is it at an all-time high?" Clearly, it has been because I haven't been tracking it that much since. And my reasoning was for gold, there's just so much instability in the market. Everybody was snatching up gold, like retail investors, and everybody was, because there's so much instability in the stock market. What's a sure bet? Investing in gold. I guess bonds would be another similar one. But you're saying it's central banks. It's these large institutions that are snatching everything up because they're preparing for something. There's a bigger picture that I wasn't aware of. Can you walk me through that a little bit? Like what's
Yeah.
actually going on here? Yeah.
Yeah, so there's longitudinal data that shows central bank allocation of gold ever so increasing since about 2012. I don't have that chart with me here readily, but you can search it. Your audience can search it and find it fairly easily. Here's the thing with gold. With gold, you're dealing with an asset with a market cap well north over $20 trillion. So to move from $2,000 to $3,000 and more, you're going to need, I mean, you're talking tens of trillions of dollars in capital rotation
Yeah.
coming into this thing.
Yeah.
And the demographic, there's only one demographic that can kind of like spike an asset like that. And it's central banks and it's institutions and it's governments and they it's a sign that we are entering a new paradigm in the monetary system. And again, this started a year.
Oh, there's a new monetary thing happening right now. Central banks are moving trillions of dollars. That's why we saw a giant spike, because you can only have that spike because it's such a large market cap if you moved a ton of money. And the only people who have that money are central banks and I guess super large institutions. Okay, now in layman's terms, walk me through, what are they preparing for? Why are they doing this? How does this affect us as investors? What I should be watching out for? Because what I'm seeing is really weird behavior outside the norm. Gold prices rising. Central banks are buying it up. That's an indication that something is happening. It's typically not a good thing for the everyday person when stuff like this happens. So as an investor, what the hell? Is there something? What should I really know that's going on? Like, how does this affect me that they're all snatching up the gold?
Yeah, I mean, this is bullish for precious metals investors and stackers and people who invest in like commodity stocks and things like that. But it's kind of scary, even if you are of that investor ilk, because it basically means that there's this loss of confidence in the U.S. government and in governments in general and institutions in general. I mean, the rest of the bond market complex is in a bear market as well. It's not just the U.S. So the reason why they're hoarding, or not hoarding, but buying up all of this gold is because they know that what comes after the dollar, after the United
Yeah.
States has abused that privilege for, you know, almost a century being the world reserve currency, there's not the world is not going to give that same privilege to anyone else ever again. There's going to be some sort of hard backing to that next asset, whether that be the brick settlement currency or something else. So gold has long been the pillar to currency, to money. It's only until recently where we became more detached of it.
I was gonna say, yeah, aren't we technically then just reverting back to how it was before? It was, everything was backed by gold before. So in turn, it's, we're correcting a mistake. If they're just hoarding gold now, everyone's going, wait a second, this was a bad idea of having nothing backing the US dollar, technically nothing backing it. We've lost trust and faith in the US dollar as it is. They're probably just printing money. Let's all start hoarding gold, because we know that this is going to be what everyone's looking at as far as what your actual value of your currency is. And that's sort of what they're doing. They're all sort of running around. There's no conspiracy, really. It's kind of rational thinking of, okay, we're, all these banks, all these countries need to start hoarding gold because this is going to be the new, we're going back to how it was 50 years ago or whatever.
Yeah, I mean, this is all very predictable because you're seeing this happen in the form of a cycle. And I don't know if you're familiar with the fourth turning concept, but basically is that it's that use in societal systems, you see pretty much a new, a revolution or some sort of pseudo revolution every 80 years or so. So if you think back 80 years ago, we had World War II. 80 years before that, we had the Civil War. 80 years before that, the Revolutionary War. And the reason behind that, why it's so predictable, is because 80 years is a typical human lifespan. So
Mm.
your older generation begins to die off, and so do the lessons learned from their times. And so we as humans, I mean, we still repeat the same mistakes over and over and over again. So we're hitting it. We're in a fourth turning right now. And I mean, yeah, I mean, it's like you said, this is all very predictable. It was bound to happen, and of course, like all these governments, I mean, they have analysts way better than me, telling them this. They all know it for sure, and so they're filling their coffers up in anticipation for a new monetary system. And it's interesting because you're starting to see this overlap in this cascade of events all happening at once. AI wars, which are very resource intensive. At the same
Mm.
time, you're starting to see this resource scarcity. I mean, you look at what's going on in Ukraine. Trump is trying to cut a deal with Russia and Ukraine to get a minerals deal. You look at what's going on in. You saw what happened in Syria. They toppled their former leader Bashar al-Assad, but now they have this partnership with the U.S. that enables the U.S. rights to their oil and petroleum and the rest of their mineral and the rest of their natural resources. So we're in a natural resource race. We're in an AI race. You're also in a fourth turning, is which is highly conducive for wars and revolutions and things of that nature. So it appears that if all of these things are happening simultaneously at once, and it's a recipe for disaster. And people look at gold. A lot of people that I have on my show, they talk of gold as an inflation hedge, which is true in a way. But more importantly, gold is a crisis hedge. It's the
Yes.
asset that people run to during times of crisis. And so, in a way, it's also insurance. It's not really much of an investment as much as it is insurance. You have a little gold stowed away so that when crisis does happen, um, it can protect you in that regard. So,
That's how I've been viewing it. That's why when I was looking at the price of gold, and it's skyrocketing, I'm going, should I be worried? Because it's a crisis hedge. I'm like, okay, why is everyone snatching this up? What's going on around me? And when you laid it out like that, I you just scared me. But when you laid it out like that, you're like the 80-year, the fourth turning. Thanks for explaining that, by the way. I wasn't familiar with that. So the 80-year, you're right. There's an AI war. There's a resource war. There's all this stuff happening. I guess I didn't really see it because I'm in the eye of the storm. Sometimes it's hard to understand that you're in the middle of it, and it just feels so normal now. There's always weird stuff happening in the news cycle every other day. I think we've become desensitized to how much is going on around us at this point. Just the craziness, war starting, all that. You're kind of like it's just part of the everyday norm. So I think it's hard to really understand that we're in the middle of it right now. But then I feel so like I don't know now. I need you to help me. I'm gonna think through this. So then when I'm looking at like my portfolio, I'm investing in the future. I'm investing in things that I'm expecting to pay out in 20 years, long-term investments. But then short term, you're like, this world looks chaotic. We're in a fourth turning. Everyone's the American dollar is not people don't have much faith in that anymore. I'm investing heavily in the US economy. How confident should I feel in my basic ETF that tracks the S&P 500? What's the S&P 500 going to look like in 30 years when I actually want to pull money out? Like, are these concerns valid that I have? Like, should I be nervous about putting money into these 30-year US based index funds, stuff like that? Because there's a war, but technically, wouldn't there be a financial war? That's how we do wars nowadays in the modern day. Like, could something happen to the US economy? Would it look drastically different? The Roman Empire fell. They not fall, but could they just not be a world leader in the same way they are today? There's China, there's India has always been stable, but me investing heavily into the US economy, which is all I'm doing when I buy an index fund. I'm investing in the US when I buy the S&P 500. Is that a smart bet? Should I actually get ahead of it and go look at emerging markets and stuff like that, even though they underperform now, but it's trending like there's going to be some sort of switch in the next 10, 15 years, maybe even sooner, that I'm just not seeing because I'm using historical performance. US has been a leader for my lifetime for the last 100 years. Why would it change? But it's changing. It's happening right now. And I just maybe didn't realize how much it was happening. A lot there, but sort of should I be worried is what I'm asking as an investor.
well, I mean, I'm not a financial advisor, but I can tell you what I think is happening and what I'm doing. And what I'm doing is, if you look at my portfolio, it's mainly commodity producers in stocks of that nature: gold miners, silver miners, oil service companies, natural gas companies, things that are critical for society. Because again, you do have this resource war that's brewing. And look, I mean, we it may seem that on face value we've patched things up between Iran and Israel, and the Ukraine war hasn't really been making much headline up until about a couple of days ago, since Donald Trump has requested more weapons to Ukraine and so forth. But any of these theaters of war can just easily pop back up again, and both of which could spike oil up dramatically. And oil is the master resource behind all these other commodities, because it's what they use in their big machinery to extract all the other commodities. So once oil goes up, the input cost of all these other commodity producers goes up, and then those commodities go up, and then we start seeing it as average everyday people in rising supply side inflation. So I think to answer your question, whether to how much stock should we give, no pun intended, to U.S. based assets? I think it's good to look back at history and to kind of play a thought experiment here. So the United States, um, and more particularly under Donald Trump, have really two options. The debt burden is really becoming unsustainable. I believe most of the payments to the annual deficit go to paying off the interest rate now of previous for that debt. And now what you're seeing is you've got about $8 trillion or so that's coming due and rolling over. They're going to have to roll it over sometime this year in the next month or two. And the thing with that is that they finance that debt at much lower rates under Secretary or sorry, former Fed chief Janet Yellen. She was also Secretary of Treasury, by the way. But they financed that debt at much lower rates, near 0%. So this really ties into why Trump is trying to put the pressure on Jerome Powell, because he needs Jerome Powell to lower rates, the Fed funds rate down to a significant chunk, because you've got $8 trillion coming in that was financed at 0% or near 0%. The Fed funds rate is now at 4.5 to 5%. I mean, this would be crippling to the US dollar and to the US bond market should it not be rolled over to a much lesser rate. And so there really is two choices. Either they just say, you know what, let's just pack it up, let's just default on our debt, or because the US debt is denominated in dollars, which is really what separates it from all other sovereign debt. Like you're in Canada, I mean, your debt, a big chunk of your debt might be denominated in US dollars. Japan has a huge chunk of debt denominated in US dollars. But our debt here in the United States is denominated in our own currency. So one option, our get out of jail free card, is just to print more money of our print more currency of our own currency. Of course, the flip side of that is that you begin to diminish the value of your currency. You begin to inflate it. So it's really two options. Either they default on the debt or they sacrifice the currency, i.e., they inflate the currency to God knows what. And by doing that, the stock market, although may be going up in nominal terms, and this is actually another chart we can look here in a second. If you look at the S&P right now, yes, it's making new all-time highs. NASDAQ is making new all-time highs. But you price it in, if you control for the amount of money in circulation today, it's nowhere near an all-time high. So yes,
Yeah.
the number is going up, but the real value is not moving in tandem with that number. And what could happen is that you're probably most likely not going to see a default. I could be wrong, but I'm not betting on a default. I think they're just gonna they're gonna inflate away the currency, and so the stock market may keep going up. We may not see this big crash, but in overall terms, controlling for inflation, it may not keep up with inflation. And you saw this in like the Venezuelan stock market. The Venezuelan stock market went to the moon, but the currency went down the shitter. In Weimar Republic, Germany, the currency, same thing happened there. The stock markets shot up, but of course, people were dumping their currency in wheelbarrows, and they had to spend it on the day that they would receive it because it would lose value so quick. So I'm not saying it's going to get that bad, but that's kind of the concept we have to be aware of, is that, yes, because the stock market may be making new all-time highs, but in terms of what? Dollars are a moving target. What's something that we can ground this asset in so that we can control for any change in the denominated currency? So to answer your question, in nominal terms, yes, the U.S. market may continue going up. It probably is going to continue going up, but you've also got to take into account, has it made up for the inflation that you're experiencing in cash? That may or may not be the case. That's probably not going to be the case, actually. So there you go.
Yeah. Originally, when I got into investing, it was a hedge against inflation. Inflation was going up so fast. I got to put this into a basic S&P 500 because I'll get back what the inflation is. So instead of just keeping it in my savings account, putting S&P 500, get the interest off of that. But I calculate that in. I'm like, inflation is so high in general. It's not profits that's causing the stock market to grow so much. It's inflationary, which I don't think I talk about enough on the channel. And that's good you brought it up right now. Um, Another thing you talked about is
Here,
how, yeah,
really
go ahead.
quick. I mean, here's the chart I was alluding to. If you don't mind, just kind of illustrated to your viewers here. So this is the S&P 500 divided by the M2 money supply. So the M2 money supply is, you can think of it as the amount of how much money is sloshing around into the system. The more money we print, the more the money supply grows. Now, when you control for the money supply, the S&P is not at an all-time high. The S&P only hit an all-time high in 2000. So we're actually at a very, I mean, we're at a critical point right now. We made a double top from earlier this year, so we'll see what happens. But yes, when you control for inflation, when you control for the money supply, even when you look at it priced in, let's say gold. So if you do the S&P priced in gold, because gold is money,
Uh,
it's nowhere near an all time high. Gold is has actually outperformed the S&P. If you depending on the time frame you look at. So just something to think about for your viewers.
One thing you mentioned about how they can default or they can just print more money, and they have, what was the number, 7 trillion in debt, you said?
Like
And
eight,
they're
7 or 8
basically,
trillion. Yeah.
and then it's basically, yeah, from as a Canadian looking at it, it's, I always hear the narrative, hey, they're just covering the interest at this point, right? That's basically what they're covering, or that's all they can do. Okay, first off, explain that a little bit to me, because I always get confused about this because it doesn't make sense. They are taking loans from a central bank, right? The Federal Reserve, which is that's a private entity. That's not a government run organization, correct? That's a company. Then they take a loan from them. They're getting a loan from them in US currency, their own currency. Now they owe money to this corporation, 7 trillion or 8 trillion dollars. Why can't they go, and this is backed by nothing. This is just, here's money. Where'd the Federal Reserve get that money from, other than the interest that the U.S. is paying them back? So what is it just feeding into each other? Like, I don't get what this is going on here. Why can't they, like, it's not computing? Why can't they just go, yeah, wipe that 7 trillion, and you're not even wiping it, it's not in a bank vault, just delete it from your Excel spreadsheet? I no longer have debt. I didn't pump more into the economy. It's going to probably cause some crazy stuff that I haven't thought about, but I now no longer have 7 trillion. You stop printing money, by the way. We just have this money that we have. So now there's no more inflation. We're just going to make this work. And we'll come to you if we ever need another loan, but let's go handle our business. That's a very simple way of doing it. But what's stopping that? Because there's nothing tying this money to anything other than we owe some corporation that's money. And that corporation is only making money because they're off the interest that we're paying them. So how they get that money in the first place if they're relying on the interest, other than they're private financiers who started it, right, with their own cash. But what's stopping that from just happening? Like, I don't get it. Why can't they just go poof, go away? Money,
No,
a
it's a good
debt.
question. It's a good question. And yeah, you're exactly right when it comes to the Federal Reserve. It is not a government agency. It is a consortium of, well, we don't know who is a shareholder of the Federal Reserve, who these banks are. I mean, you could probably surmise, but JP Morgan probably has a stake at the Federal Reserve and all these other big banks as well. But we don't really know who the shareholders of this consortium are. And even when it comes to the head of the Fed, in this case, it's Jerome Powell. He the president is afforded a list to choose from. The president cannot go out from outside of the boundaries of the list that he's presented to choose who the next Fed chair is. It has to be it has to come from a committee, and so that's why Donald Trump cannot fire Jerome Powell. That's why he's putting on the pressure to get him out of there. Because if he could fire him, he'd fire him a long time ago. So he's trying to add on political pressure to get him to cut rates or at least get him to resign. We'll see whether or not that works. But in terms of why can't we just delete the debt? Yes, I mean they are creating. So our debt, when the Treasury, when government agencies need money, the Treasury goes and they procure a debt from the Federal Reserve. The Federal Reserve writes a debt to the Treasury. Now the U.S. government owes the Federal Reserve for that debt. Why can't we just write it off? Well, we have to understand. I mean, who does the debt belong to? It's The debt belongs to other banks. It's other entities that. So if I'm indebted to you and I just write it off. So say I owe you $100,000 and it's just written off, and you were accounting for that $100,000 in your books, and all of a sudden the $100,000 is gone from your books. That'd be a big hole in your budget, I'd presume.
Yeah.
And so by writing off the debt on a mass scale, you kind of leave the lenders with a hole in their pocket, because yes, the debt is owed by the Federal Reserve, but then that money is used to finance, that money is used down the line. So it's like I get the money from the Fed, or you get the money from the Fed, and then you loan it out to me, and then our debt is wiped clean, and you're like, what happened to my $100,000 that I lent you, right? And then if you extrapolate that out like on a mass scale, kind of it'd be unpredictable. You'd have this big hole in a huge collective of entities out there that need the money that they lent out back.
Because the Federal Reserve's not a US corp, I'm assuming it might not even be a US company. It's not beholden to a monopoly rule because they're technically a monopoly on all debt in the United States. Shouldn't that not even be like the US has one large lender for all its income, the Federal Reserve? That doesn't seem smart. It doesn't seem like it should even be legal. Trump is being given a list of here's who you're allowed to put on the head of this. Everything seems like the best skeevy setup I've ever seen. Like it's the most cash flow positive corporate, like they're living the corporate dream over there. It's just like everything's perfect. They got the president in their pocket. He only has to work with the guy that we tell him he has to work with. They get all their money from us. I'm still not quite getting it. It's like, how did they get so much power where they're the number one lender? Once again, they started with some private financing a long time ago, but that's gone. That's way gone. It's now just like there's giving back U.S. interest to them. The U.S. is just like circulating it back. What's stopping the U.S. from going, yeah, we don't want to work with you. We'll print our own money, because printing money anyways can cause inflation if they just get more loans from the Federal Reserve. So put more money. Why not just cut out the middleman? Because none of it's real. I would get it if it was backed by something.
That's how it was before the Federal
Yeah,
Reserve.
but
Print our own money from the Treasury. But now we have this middleman, the Federal Reserve, and the rationale that they put behind that is that the Federal Reserve is a independent institution, which can't be politicized. They viewed, because the rationale they used was that we don't want politicians to politicize the monetary policy of the United States, because then so that's how they framed it. Whether or not, I mean, there's trade-offs in everything, right? I mean, I can kind of see what they were saying there, but there's obviously some underhandedness involved as well.
Well, I'm just saying, there'd have to be massive oversight for then that to be trusted. There'd have to be the most transparent corporation on the planet for you to be like, okay, who exactly are you hiring? Who are all the owners? Like, if you don't want to be politicized, you then have to tell us everything that's happening within this company, where everything is there. There's nothing that I as a normal person couldn't get access to. Then I trust you. Then you're a third party entity. Then you're working the best interest. But if it's all in the shadows, and you're, like I said, you're choosing from a list, and yeah, it's what it is. And you interview people who are professional, who know all about this on a daily basis, and you're even going, we don't really know who's part of the board and who owns it. It's like, problem number one, I'd much rather have the government just printing money, and at least I elected those people who are making the dumb mistakes and I can see them. And the second part is, it's not backed by anything. So there's no giant vault of gold underground like it used to be. So they're legitimately just going, hey, you want $50 trillion? Gotcha. Oh, 100. You make it any number you want. It's all the same. It makes no difference. It's just a number the US is thinking, however big that number is, the more it's going to affect inflation. So we got to think about that. But the number could be anything. If the number is not backed by anything, the number is not real. It's like they made this imaginary system up that we're all just playing ball. It's great. It's just weird. It hurts my head a bit when I think about it. I go, wait a second. It's like the biggest scam that's happening, and nobody knows how to stop it or wants to stop it. That's what I don't.
It is going to come to an end. I mean, we are at the end stages of this thing unraveling, and kind of put things full circle here with the gold price. The gold price is telling us that. The gold price is telling us that we are seeing the end of the current monetary system, the world monetary system, and we're heading into something new. Whether what that new thing is, no one really knows. We can only speculate. It could be the new BRIC settlement currency. It could be a multipolar world where you've got BRICS on one side and the Western countries on the other side, and you don't have a unipolar world anymore. You have a multi-world order. There's no unified world order that we've seen since the early 1990s. Since the fall of the Soviet Union,
Mm.
the United States and the collective West experienced unmatched. We had no competition whatsoever, and we've dropped the ball. I mean, we were given the world on a silver platter, and now here we are. We inherited a unipolar world, and now it's probably going to be a multipolar world. We'll see how things transpire.
But how feasible is that? Because of globalization, and every country and most countries need another country in order to manufacture, in order to exist. You can't just have world within worlds now. I feel like everyone is pretty much reliant on each other. There's some countries that are exempt. I feel like India is a pretty good example of being self-sufficient, but most countries rely on other countries in order to operate. So they have to get along to some degree. They have to have some sort of like trade agreements, some sort of agreed upon currency and trading. Like it can't just be like, I'm going to do my thing over here, you'll do your thing over here, and slow down that process of trade just because everyone's so self reliant. Or am I missing something there? Because you do have a lot of experts on your channel, you bring on a lot of people. So, so they would know a lot more about this. What is their sentiment? How do they actually see it? Like, what's the general sense you're getting from the people you bring on? Like, where everyone you
I mean,
notice is agreeing on something.
yeah, I mean, President Trump is giving us the clues. He's, with the tariff policies, it's not just a negotiation tactic. It's also forcing countries to choose a side. Are you going to be
Mm,
with BRICS? Are you going to be with us? He's threatening countries with with an extra 10% to 25% tariff for anyone that dares to be a part of this BRICS settlement currency. He's threatening secondary tariffs on any country that does business with Russia. So things like that. And what the logical conclusion of that is again, yes, we will continue working with each other. It just depends on who the each other are. Those people work with each other, and those people work with each other. But it's not going to be like this unified global. Globalism is effectively dying, or pretty much dead by now. There's no more globalism. It's multi-global, multipolarity. China and Russia, Iran, the rest of the BRICS nations are going to work with each other in trade, and then you're going to have the Western powers that are going to work with each other. When you think about it this way, the reason why we've seen this disinflationary effect on our goods and services over the course of the last 60 70 years, yes, technology plays a big role in bringing prices down, but so does trade, and you're able to mitigate um, your your needs to other countries that can better produce what you need. You get cheaper goods. Once that cuts off, that's when you start seeing the unraveling of that happen. Instead of disinflation, you start having inflation back up because you're hampering with the efficiency of the trade of goods and services.
yeah.
So for example, Europe has no collateral. Europe has no commodities. Now they're going to have to, they would go get, they were getting their, Germany at least was getting their oil from Russia. Now that relationship is gone. They have to find another source. Now they have to pay more for that energy than they were before. Hence, they're seeing inflation on their side. Now, extend that thought experiment out even further to a much larger scale, and now you can see why inflation is probably the most logical course of action, because you're starting to see global trade unwind. You're probably going to start seeing more money printing as these countries, as bond markets go down the toilet. They're going to start printing more money, and hence more inflation. More inflation on the demand side through money printing, more inflation on the supply side because of less trade, more wars. You're gonna start seeing more wars pop up. You've already seen like what, 3 wars pop up in the last 3 years: Ukraine,
Yeah.
Gaza, Iran. Who knows what happens in the South China Sea? Wars are, of course, inflationary, not deflationary, because they cause a bottleneck on goods and services again. So it really does appear that all roads lead to inflation. and crisis, and that's where the precious metals comes in. That's why I'm probably um, overloaded on commodity stocks and commodities, because that's what all the warning indicators are pointing at to me.
Talk about that a little bit. There's like 18 different things I want to ask you right now, so I got to focus on one. So you said commodities. When you say you focus on them, are you the entire pipeline of commodities? So like exploration, development, everything. You use the entire pipeline for uranium, for gold, for silver. You buy exploration companies, development companies, and all that stuff. You own a bunch of that just because you're the most confident in that stuff moving forward because that's what everyone is loading up on, especially gold. Is that sort of how you're doing it? Do you invest? Do you still do traditional investing, like the boring stuff that we do a lot on my channel, which is like buying an ETF, buying into like a standard S&P 500, or do you even mess around with tech stocks? Do you even look at things like Google, Microsoft, Facebook? Very different than commodities. Um, like talk through that a little bit, I guess. Like, how do you view the stock market? What kind of stuff are you actually like you paying attention to outside of commodities as well?
Yeah, to answer your question, no, I'm pretty much just loaded up on commodities, no tech stocks, none of that other stuff. But I do utilize some ETFs for getting some exposure to some of these commodity markets, because and I don't mess around with like explorers and a lot of developers, just because I mean these things are they could be lottery tickets, right? I mean you can they have a much bigger multiple to the commodity price, but at the same time you're less likely to find a winner. A lot of these are pretty pretty bad company, pretty bad businesses. You've got to have a very discerning eye. So in a lot of cases, I just buy the producers, the big major producers of each commodity sector, maybe even the ETF. Don't over allocate too much in one particular sector, 2%, 3%, 4% of your total portfolio allocation on a single position, to kind of protect yourself that way. And then really identify what has asymmetry. Asymmetry is when you can see that there's uh, massive massive upside compared to the downside. So if something has a 10x potential, given you look at the charts, you look at some of the where we were in the past, is this asset commodity critical to the functioning of society? One of the guests that I interview, Mr. Rick Rule, he says that when you turn on the lights, you expect the lights to come on. One of the reasons why I invest in uranium, for example, is because uh, some may argue that we need a higher uranium price in order to justify the lights coming on. So the the electricity companies are going to buy the uranium that they need to for their nuclear power plants and so forth. So it's really betting on inevitabilities. And the reason why I say asymmetry is because that way you can have multiple allocations. Again, 1 to 4%, and all you really need is a handful of 10 baggers to make up for your losses. You may be 20% accurate, but if those 20% of picks are 10 baggers or something to that effect, and they make up for your losses. They
Yeah.
make up for all the other ones that don't pop off. So really understanding risk management, I would say. But no, but yeah, I'm fully in commodities as of right now.
Let's talk about energy a little bit because we talk about uranium. There's nuclear, there's solar, there's hydro, there's like wind. Because countries are sort of teaming up, and this is gonna mess up supply lines for a temporary until they all sort of figure out whose role is what. What's happening there? So are all countries sort of now just investing in every type of energy production, just whatever they can get their hands on, just to make sure that the lights do turn on? Hey, so like there's no bias. It's like, hey, if there's a lot of wind here, we set up wind turbine things or whatever windmills. If there's a flowing river, we put up a dam. Oh, if it's always hot here, we're setting up solar. And our backbone, a bunch of nuclear power plants everywhere. Is everyone using that now? It's just like unbiased. Just make sure we have plan A, B, C, D, E, F, so the lights always turn on. Is that sort of the general census when it comes to the energy war that happens around the world now? It's like everyone wants to make sure that the lights turn on.
Yeah, and even more so on the other side of the
Coal.
spectrum, which is hydrocarbons, right? You saw that happen in Europe. Germany cut off their natural gas pipeline to Russia, and now they're importing coal from, I believe, France. It's it's whatever energy that they can procure that is most, I guess, cost effective, and in a lot of cases, it is still the hydrocarbons. But yeah, I mean, you're seeing all of these third. I hate using this word third world countries, but these developing countries come into to prominence as well, and they're looking to industrialize too, in places like Africa and Asia and South America. So there is this big blossoming demand for more and more energy, and that's where, I mean, it all again it goes back to what we were talking about. You're starting to see this cascading of events, energy scarcity, energy wars, resource wars, AI. There's an AI race which is directly tied to high consumption of energy.
Mhm.
So that's where all the roads lead to, in my view. But yeah, too much to your point, it's um, every country, every country wants to industrialize, no matter how far behind that they are, and whether it's through
Is
wind or whether it's through hydrocarbons, they're going to find a way. Go ahead.
a lot of people, when I get into geopolitics, sometimes get into conspiracy theories, like there's a one world thing, there's all this stuff happening. But is everything happening around us, every country, all these wars starting, resource wars, this sort of what looks chaotic on the outside? Is it just self preservation by all these countries and their leaders trying to stay competitive, trying to technically do obviously what's best for them when someone's doing something, but obviously what's best for their own country? And that's why, you know, the way the world, it's human nature is all that's happening right now. There is no grand, there's people in the shadows lurking. It's like, no, it's humans being humans. We're tribalistic. China, Russia are like, no, we get along better than we do with the West. All right, you got that, you got that, you got that. All right, great. We'll make a coalition here. The West is like, yeah, we don't really get along with you guys. This is a human thing. UK, Canada, Mexico, we're doing our thing here. What's best for us? They're thinking what's best for them. Everyone's just trying to take care of themselves, and that's human nature, and that's all that's really happening right now. Um, or is there some underlying thing happening that I'm unaware of as well?
Yeah, I mean, you can make the case that there's like, like roundtable groups and committees that get
Yeah,
together, and it's not like made public or anything. But in their minds, it's not like they think that they're evil. They think that they're doing what's good. And but by and large, it is human. It is human nature playing out. You mentioned Russia and China. Russia and China were enemies up until 20 or so years ago, and then when they decided it's much more advantageous for the both of us to be allies here. We
yeah,
do share a border, and we share, say, a common enemy. Iran, same thing with Iran as well. Now, I mean, allies and enemies, these things always are fluid. They change with the circumstance, and you can't really count on anyone up until it gets, when the going gets tough. That's that's really when alliances change and so forth. I mean, right now you're starting to see even Japan and South Korea signal that they're willing to work with BRICS. Of course, you've got, are they going to make peace with North Korea? Are they going to make peace with China? So it's all, a lot of it is human nature. Yes, it's largely human nature. Is there a conspiracy element to it? Look, I mean, we're all humans. We all conspire all the time, right?
yeah.
You
That's human
conspire.
though.
That,
Yeah,
that's again, that's to your point, human nature.
yeah,
So just the poo-poo conspiracy. I don't think that's I don't think that's very wise. That's not very. It kind of says that you're kind of aloof to human nature, because we as humans, we do conspire with each other, and we do form cliques, and we do form networks, and we do form factions. And as easy as those factions were formed, they can also break off. Yes, I mean,
yeah,
they're what was like 3 years ago, like the World Economic Forum was like the hot thing on people's radar screen. Now no one ever talks about it because it's lost influence and things like that. So yeah, I mean, these roundtable groups, they form, but then they dissipate over time. New cliques are formed, new factions are formed. They break away. They come into they. It's all naturally emergent. It's all dynamic. It's very hard to pin down. You could say that there are very like high from a very low resolution perspective, that there are factions. There's probably like this European globalist faction. There's probably more like this neocon faction in the United States that wants war in the Middle East for their own goal and so forth. But yeah, I mean that all goes back to human nature, like you said.
So we talked about sort of like the impact on the resources, resource war, how countries are sort of protecting themselves so the lights turn back on. You mentioned AI, and AI is relatively new to the scene. I'd say in the last 2 years, it's been making its impact. 12 months ago, around this point last year, I remember I talk like I'm in advertising, and I remember thinking, oh, I better learn AI and get ahead of the curve because in 5 years, it's going to be doing this, 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 this. I had a list of things it'll be doing in 5 years. It's doing everything on that list already. So it advanced 5 years quicker than I thought it would. And I'm in advertising. I'm like, oh my God, it's doing everything. Does AI, in your opinion, change the game? Does it make it the future a little bit more unpredictable? Because its effect to security, its effect to the financial industry. You add, and now we're getting a little bit nerdy here, quantum computing with AI. Quantum computing can do trillions of calculations that would take us actually billions of years in like a microsecond. You add it with an AI system. What's stopping it from hacking every government agency, financial cyber attacks, messing up all the financial, like the stock market, and doing whatever it really wants, going crazy? And the thing with AI is, even at its most rudimentary, it gives a lot of power to an individual person, and anyone with internet and a cell phone can leverage it to some extent. So there's no one on the planet that can't sort of grow with this new technology. It's like we're all sort of other than big corporations that have access to the quantum computing component, but just as an everyday person, we all have access to this technology, and we're all sort of being overwhelmed by it at the same time. A kid in a rural village in China has access to the same technology if he has a cell phone than me here in Vancouver. Like, so it's the first time we're all sort of coming and experiencing the same sort of thing together as human beings. How do you see that affecting geopolitics in the next 5 years? And personally, 5 years, I think you cannot predict 5 years in the future accurately anymore when it comes to AI because it's advancing so fast. But I want to hear sort of your opinions on what effect has this had on geopolitics currently? What do you think, how will it affect geopolitics moving forward? Does this have effect? Am I paranoid about the stock market impact? Like, hey man, people get a if you're China and you want to mess up the US, quantum computing with a crazy AI system, hack every single bank, like do all this crazy stuff, mess up everything. What's stopping them from doing that? You cannot have enough internet security to stop a quantum computer with good AI from getting into whatever password protected thing you have. So go off. Tell me all your thoughts about
Yeah.
AI and Geo.
Yeah. Well, I think AI is a great leveler, and there's very much all this fear and gloom when it comes to AI, especially here in the West. We look at it in a very negative way. But in places like China, from what I've been told, is that they look at it differently. They look at it as an opportunity. And yes, AI will most likely take your job if you're like in one of those fields that can be automated in that way. But at the same time, it's also liberating in the sense that we can have cases where we've got solo entrepreneurs where you don't need this big overhead of employees to do all this work for you. It kind of frees you from being an employee and becoming more of an entrepreneur, because now I can start my own company, you can start your own company. We don't have to deal with massive overhead, and now all of a sudden we can do what we wanted to do. We don't need to be employees anymore. Yes, it may not be voluntary at first. Maybe it may come from an involuntary place because AI replaced our job. But then at the same time, we can use that to our advantage. We can use AI to create our own organizations and scale them up without um, all the necessities that have traditionally been required. You look at YouTube, what YouTube's done up until about 15, 20 years ago. If you weren't on TV, you had no presence. Now, anyone can start a YouTube channel. I've started a YouTube channel. I've got like 64, 65,000 subscribers. And I have like very little cost. Like maybe this entire studio cost me like $1,000.
Yeah.
I don't need like a fancy studio, and I'm reaching, tens of thousands, hundreds of thousands of people. And so in much the same way, AI can act as a liberator to the average person. You look at things historically, we went from feudalism to being serfs to where the government owned the people, over to the 19th and 20th century with the Industrial Revolution, where power shifted from the government to corporations. And now we're heading into the age of the individual, where now the individual can create their own they can create their own destiny by becoming an entrepreneur, because the playing field is getting leveled. You need less resources to do so. In much the same way that I don't need like a big fancy studio. I mean, I guess that would help if I had like a nice fancy studio, but like you don't need it to have a career in media anymore. You don't need, I don't need to like go be a big news anchor at like the local news station or something like that. So I look at it very optimistically. I think this is a good thing for the most part. I mean, some people are going to be hit by it, but if you are a very opportunistic person and you have a vision of what you'd like to produce, you have creativity, you can put that to good use. I think as AI begins to automate more and more things, you can use that to your advantage to build out the empire that you want. Because we are entering the age of the individual. We're exiting the age of the corporation. And you look at some of these companies that are very lean, like Telegram. I think they're making like $7 billion in like millions of dollars in revenue. And it turns out they only had like 30 employees or something like that. I think you're going to see more of that. You're going to see more billion-dollar
Yeah.
companies with like a handful of employees, and that's great, especially if you have the vision for it.
The barrier to entry for solopreneurs is way lower, but to stand out, you'd have to be more skilled. If everyone can now join and start doing it, you have to be even better than everyone else. A thing that I'll use like the movie industry back in the 90s, because I like Kevin Smith movies. I like Kevin Smith podcasts. I was like listening to him talk about movies and stuff. But he said something. He's like, in the 90s, barrier to entry to make a film was really, really hard because they'd have to print the film roll, go like, I don't know, do this whole process and like chop up each slide and like weave it together. He's like, so me just having enough money to get the finances together to film, right, was such an achievement that I know I could like 99% of people couldn't make a movie. So my quality of movie could be lower just because less people were doing it because it was so hard to get into. He's like, now you can make a movie on your phone and everyone can record so fast. But because everyone's doing it, everyone is like coming in and making movies that to stand out before was very easy for him, just having a semi-original script. But now if you made that same movie now, he would get lost in the shuffle. He'd have to do something crazy exceptional to stand out because everyone's able to do it. So his skill level has to be so much higher. So even he admitted, he's like, I couldn't do what I did in the 90s. Now the skill level will be too low. So I think even when you're starting a business now, or even a YouTube channel, since everyone has a camera and they can buy an Amazon kit, what makes your content so good and unique that you stand out in the algorithm? Because everyone's got so much content on your phone, on TikTok, on YouTube, still traditional broadcast, on everything. It's like, great, we all can do it. But you couldn't just make a YouTube video like, like back 10, 15 years ago, like, hey guys, it's a vlog, and a guy would just walk around and like, you got 1 million views. It's crazy. Or standard content. Like you've seen it all, but there's like types of content that if someone got 1 million views on it even 5 years ago, they would get legitimately 100 views, or it wouldn't even crack any views now. It's like you have to sort of innovate and improve or do something so unique or something so high value that you can get through the algorithm and get people's attention. So I agree. It's really, really good for highly ambitious opportunists where you go, okay, great. I now have access to everything that I wish I had access to, and I can do this thing, but it's actually gonna be 10 times harder now just because everyone can do the exact same thing. But because I'm ambitious and I'm opportunist, I'll grind it out. I'll figure it out. But I'm grateful for this because if it was 5 years ago, I couldn't afford this whole setup. I couldn't do all this, right? So now they have the opportunity, but it comes at the fact that competition's way higher through the roof. How do you feel then about the AI impact on like the capital markets and stuff like that? When you look at all the, like right now it's, because I know that you don't invest in these companies, but like companies like Microsoft, like Google, everyone's dumping a lot of money into AI research. They're all sort of, I think that's what's moving their stock price a lot too. People go like, okay, who's a leader in this space? Do you think that's as a house of cards? Like, are you just waiting for that to fall? I know this isn't your thing; it's commodities, but outside looking in, do you think this is? Do you think they're valued correctly, overvalued? Do you think everyone is putting as much importance on AI as they should be, and like everyone's reacting properly to it?
I think the like the 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 big tech companies like the Microsofts and the Apples and the Googles and Facebooks, I think they are uh, allocating capital to it correctly. But some of the companies on the lower tier of that stuff, I think they're just blindly putting money into like LLM research and large reasoning models as well, LRMs in this case. And I think that's largely oversaturated. I was reading a paper the other day, and it seems like with these LLMs and even these LRMs, which are LLMs are kind of like these glorified, to simplify things, they're kind of like glorified autocorrects, right? They take the text that came before it, and then they generate the highest probability word to come after it using the corpus of data that they have to reference off of, and then they generate that. It's not really intelligence. It's just predicting the next most likely word. Large reasoning models, they actually try to reason their way to an answer. This is your DeepSeek, for example. DeepSeek, when you run a prompt on DeepSeek, it'll show you how it reasoned to get the prompt to answer your prompt. And what they found out with a lot of these LRMs is that they hit like a certain there's like a certain asymptotic point in their development. Like every single LRM begins to like phase out. Like there's a point of diminishing returns around 120, 130 IQ. Now, I mean that's a lot. I mean
Yeah.
that's an above average IQ in human terms, but we were expecting this thing to go to like 1,000 IQ, 2,000 IQ, etc. So I think there's a big misallocation to just LLM research and LRM research, and there's kind of like this blind spot on all these other AI research that could be done because they're just focused on text based AI. Tesla, I think, is really positioned to become the global leader in AI, and that's because, um, and this is all done by design by from Elon. XAI with X, they've got this big corpus of data
Yeah.
to use using X. I believe that they're going to merge it eventually. They're going to merge X and XAI, which X is a part of XAI now. They're going to merge XAI with Tesla to get the spatial data because, I mean, I don't believe any other company has the data set that Tesla has when it comes to spatial data and computer vision. The computer vision models that they run, which is basically like leveraging AI from a spatial dimension as opposed from a textual dimension. So I think Tesla really has the best chance of being the first real AI company where they have the spatial data through Tesla, they have the textual data through X, and whatever else they may have on top of it. They can really leverage both of those in tandem to create something unprecedented in the AI space. And you look at where all the big data science talent is going, and data analytics talent is going, and AI science talent is going. It's all going to private industry. There's this big, not to go off on a tangent, but there is like this big conspiracy theory that like the government is 20 years ahead in AI research, but they're keeping it closed lid. Like, no, guys, I worked for the government. I worked in data science. If you're a data scientist, you don't look, if you want the best possible income, you go and apply to Google, you go and apply to Facebook, you go to apply to Microsoft, Apple, etc. If you're looking to maximize on income, the government is the last place you would go to. So all the heavy talent in data science research, AI research, it's all going to private industry. Um, and so the government, I feel, is just kind of is ill prepared for this. But industry is really what's going to be driving this moving forward, not
There's
the
a couple
government,
things that. So for spatial data, you mean basically all the Tesla cars because they've been collecting all that data, people driving around, they have all of that.
because they use
That's pretty
computer
interesting.
vision. They use computer vision to like auto drive, like to self drive their vehicles, right? So there's that AI component because AI isn't just reading text, right? That's just one dimension of AI. You've also got computer vision. You've got like machine learning models. You've got like recommendation engines on Netflix and Amazon that best predict the next product you're going to buy. You've got, so much stuff, sentiment analysis. Um, there's AI, like data, AI research. It's called AI now, but back in the day, we just called statistics. Like 10, like 15 years ago, we just called it statistics, right? But now we went from statistics to machine learning to AI. It's all just, these ideas have been around for a while. They've been, you look at some of these neural network models. I mean, you can find them in like textbooks from the 60s and 70s and things like that. We just didn't have the computing power. We just didn't have the data that made them pragmatic. But now we do. And so it's not statistics, it's AI research.
As an investor, it's important because you mentioned what X could we do be doing XAI, Tesla, and how they're going to integrate it all, and a little bit forward thinking there. I guess it's interesting as an investor to look at how each company is leaning into AI because Facebook has a different approach, right? They're not trying to make the best LLM like Claude or ChatGPT. They're an advertising platform. That's what Facebook is. I'm in advertising. So I look at what they're doing, and it's just, I'm just sort of talking out loud here, but Facebook, like X, you outline what Elon's overall vision could be for that. And I go, great, that makes sense for what they have, all the information they have. For Facebook, when you hear Zuckerberg talk, he goes, I want it where someone, me or you, could just tell Facebook, I want to get 10 sales a day on my new ebook. I got $100, make it happen. And it'll generate the creatives, the video ads, it'll target all the users, nothing. Because right now, there's ad agencies in the middle. You have to go through an ad agency, set it all up for you, or you do it yourself and you just don't do it properly, right? One of the two, right? And they're basically going, they know what their bread and butter is. It's ad revenue. That's how Facebook makes money. It's not through their, VR and all that kind of stuff. It's he kind of said, okay, this is how we're going to use it now. We're going to eliminate all ad agencies, everything. We're going to make it so easy for anybody to run ads, make money, all that kind of stuff. So that's what makes me go for Meta. I go, okay, cool. They got a clear vision of how they're going to use this. The only one I still haven't really figured out, and like X makes sense, what their vision is and what they're trying to do with AI exactly is Google. Because I feel like they're just doing a little bit of every. I haven't.
Half-heartedly. They're kind of doing it half-heartedly because it eats up their it cannibalizes their business model.
Yeah, yeah. So I'm just trying to think of like, are they trying to have Gemini as a new browser that everyone uses and they can run ads through there, right? Or because they have access to all the data. All YouTube is Google, right? They got Google Maps. They have the whole world scanned. Every Android phone, if you have a Chrome browser on it, or depending on what you're using, or Google Pixel, they have all the data. I just don't see a very like clear. I invest heavily in Google too, so I was like, oh, what are you guys doing? It's like I don't see like this super clear vision other than being everything they're currently doing, but just like the leaders in the AI version of it. So like search, I don't know, phones, maps and stuff like that. But I feel like they're the ones who are falling behind a bit. When I look outside, looking in, I go, X has a clear vision, Meta has a clear vision, Google not so much. Even Microsoft has a more clear vision. It's just like Chat GPT and all that kind of stuff. Like that's sort of I go, okay, that's what they're trying to do there. But Google is the only one where I go, I'm not entirely sure what you guys are doing here with AI. Like I don't have a clear vision. Have you seen anything with them where you think they might be leaning like Google, like what they're trying to make their anchor point for AI?
No, I think they're just doing it half-heartedly. Like apparently they could have released their AI version before ChatGPT did. But they chose not to because it eats up and it cannibalizes their business model essentially in search. So they haven't really. I think that they want to do it because they have to stay competitive, but they're still wearing kid gloves with this stuff because they're too afraid as to whether or not they're too afraid of losing their search business, which is their bread and butter.
So just looking forward now into 2025, how do you see things going for the remainder of the year? Do you just see the kind of the kookiness and the craziness sort of ramping up? I know the S&P 500 is going back to hitting all-time highs again. But I don't know what's going to happen there. What's your general census on the markets? Like, what should we expect? Another micro crash at some point? That's kind of what I expect, like some sort of dip to happen. I just can't see it. the news cycle was so weird. I just feel like at any moment something could be said or done that would cause a. Or do you feel that we've become desensitized to it since Trump came into office? Because now the tariff announcements aren't affecting the markets as much as they were before. When he just says tariff this, tariff that, they don't go crazy like they were before. Do you think we've all sort of settled in? We've priced in what tariffs can do even in the markets now. We're like, hey, we don't have to overreact anymore. Everything's now can just kind of get back on track. How do you feel things are going to go now, regardless of how crazy it gets?
Yeah, I mean, I don't have a crystal ball or anything. I, I think there's it's a big tinderbox. Anything could ignite it either way. I mean, if we get massive rate cuts, people think that if we cut rates, then the market's going to shoot on up to even greater all-time highs. But if you look at rate cuts in the past, they've usually been accompanied by market sell-offs, which is counterintuitive. Because the reason why that is because when you have rate cuts, it's a signal to the market that the economy is weak, right? If I'm a doctor and you come to me and I prescribe you medicine or I prescribe you some sort of treatment to whatever ailment, you're not going to be like, oh hell yeah, like I'm great. Like no, that's a sign that you're sick.
Yeah.
And the same way, in much the same way, again, you look at the charts historically, looking at the S&P and the Fed funds, and like when cuts happen, it's actually the opposite that happens. So with Trump asking for rates to be cut, whether or not he gets that done through Jerome Powell or he resigns due to the political pressure that he's under, when we get someone more dovish in the Fed, it may not work out in the way people anticipate. Um, so there is that downside risk. Of course, Warren Buffett has a record position in cash. You know, the old man certainly knows a few things. What does he know that we don't know? Is he correct to have such a huge allotment in cash? I don't know. It's very difficult. Um, all that's why I kind of stay away from the broad market. It's fairly unpredictable. So are the commodity markets, but if you can I kind of anchor myself to what gold is doing, crisis. You know, you look at the geopolitics. I don't want to give out too many stories, but one of the guests that I interview, um, well, I mean, I'll go ahead and say it. I mean, one of the guests that I interviewed, he has fairly good contacts in the Trump administration, and they said to expect war to break back out in Iran and Israel, you know, sometime in August. Then I got a memo from him yesterday saying that to expect something to happen next week. So it's
Mhm.
like, okay, I guess we'll see what
We'll
happens, whether or not
see.
that's correct or not.
Yeah. But like,
But
would that even, but like, if war breaks out again, do you think the markets have adjusted for this now? It's not going to be crazy impact on the markets anymore. It's just like, hey, this is the status quo. We just get into wars every 3 months and tariffs
there's
happen
a
every other
higher,
week.
yeah, so there's a higher tolerance now for it, right? So
That's
now instead of like, you know, seeing some hundreds of missiles flying into major cities, um, you know, what's it really going to take to scare the markets? Like a tactical nuke or something? Like I don't know. Like it's got to be something. It's got to be something to a higher scale to, because
the line has,
the tolerance levels are going up and up and up and up. Like if they do something like they did back in like with the original, like if when Iran first struck Israel back last year and they hit like a parking lot or something, that's not going to do anything anymore to the markets. Now they've got to like really, there's got to be something that really takes it to the next level to spook the markets. Much to your point.
yeah, which is worrisome because typically when the line moves like that, it's moving for a reason, which means something's going to happen to keep moving that line. Like, because the tolerance has gotten, like, leaders become more desensitized, so they do more brash things. Everyone. Technically, for the market, though, it's like it gives me a little bit less to worry about. I don't freak out as much if another tariff is announced or something like that. I go like, okay, whatever. It's just like in one ear, out the other ear. I don't think everyone has time to freak out anymore about that kind of stuff. Um, I have a couple questions about you. What were you doing before YouTube? When did you start this channel?
I
How
started
long
it
would it?
actually. Yeah, I started it back in 2020, but I didn't really. I posted like one or two videos, and then I took like and then I just went MIA. Like I was like, I posted like one or two videos, two or three videos actually, And then I was like, I kind of like got discouraged. It got like 10 views, 20 views or
Yeah.
something.
Yeah.
And then I restarted it back in late 2022. Originally, it wasn't interviews. It was just me, mainly just me monologuing, looking through like stock charts and for like 10 or 15 minutes. Restarted back in November of 2022. Became more consistent with it then. And then in May of 2023, I started incorporating guests onto my platform. I think I had just gone to 1,000 subs. So I had enough credibility to start. I felt like I had enough credibility to start reaching out to guests to come on my show. And then from that point up until 2024 of last year, June of last year, that's when I left my W-2 job, my 9 to 5 job. And I just went all in on this, doing like 6 or 7 interviews a week. Maybe I might do more. I don't know. We'll see. Uh, and
How are you
yeah, I
doing
mean,
that? That's crazy, by the way. Sorry to cut you out. Like when you look at your channel, you have content every day, and you don't have like a 5 minute video. Like I had like a 6 minute video go online today. It's like woo ha. I look at your channel, you have 40-minute deep dives with experts who know their stuff about whatever thing you guys are talking about, that they gold, silver, geopolitics. But it's not like that one for the week. It's you got the same thing again tomorrow with another expert, and then the
I
next
actually have
day,
one
and
coming
then
up in
the
an hour. So I have another one coming. I have another interview coming up in an hour. So, um, yeah, I'm just doing what I love. I mean, I love researching this stuff. If I wasn't doing this, I'd be watching all the other channels that do this. And I don't have a real job anymore.
well,
So
then this is
this is my job now. So it's like I'll spend my 40 hours or whatever, however many hours I work now, just doing this. And I can't ask for a better I guess
what were you doing
day
before
job.
though? What were you doing before
I was
this?
uh I was in data analytics and data science.
Okay, cool. So, what I think is actually helpful for this, so you understand what's working and not working. You got to a
I
thousand.
leverage my analytics a whole ton. I mean, I think that's one of the big reasons why I was able to grow pretty fast is because I do look at my analytics. I do look at where people drop off. I do look at what other content that my audience
Same.
watches, and I try to like so like I do because like it's very interesting because like some of these other creators I talk to, they like I ask them like, so do you like I ask them about their analytics? They have no clue. Like I didn't even, you guys don't even look at your analytics. Like you're just flying blind.
Yeah, but I
I
think
don't know.
most people are. Like, I have an advertising background, so I'm doing what you did. I'm looking at retention rates, I'm looking at click-through rates and all that kind of stuff, and optimizing, looking at different content formats. I'm testing stuff every week. I test out something that just fails to see like, oh, does this move the needle, not move the needle, and then I just move on to the next thing. And that's because in advertising, what is it? It's a data analytics. You're just figuring out what campaigns work. You got to 1,000 subscribers in 2023. You started bringing on guests because they're at 60 something thousand, which is pretty insane growth for only a few years from 2023 to now. It's like a couple, 2.5 years. That's 60,000 people. That's insane growth, actually. So, was it when you started bringing on guests, you saw that sort of snowball effect start when you started talking to other people and bringing them on? Is that when you started seeing more and more when you niched out into more like commodities and stuff? Were you more broad before talking about everything and you're like, wait a second, I'm gonna bring on guests, talk about geopolitics and commodities, and then you sort of found your audience? Was that sort of how it went about?
Yeah. So when I restarted the channel in 2022, it was mainly just me monologuing for like 10 to 15 minutes. I would talk about everything market related. And then in 20, like in the summer, early summer of 2023, I really started to hone in on uranium stocks.
Mm-hmm.
Because I mean, I was invested, I still am invested in uranium stocks. It's a fairly simple but complex market to understand at the same time. Simple in the sense that you can kind of predict out the future demand. So it's simple in that respect, but it's complicated when it comes to the timing. But uh, I found a niche in uranium. I was passionate about uranium, and so I started getting uh, uranium focused investors to come on as guests on my show. Um, I grew from that, and then fast forward a year, um, I left my day job, went all in on this. I was doing like 2 or 3 interviews a week back when I was doing my day job. So once I left my day job, I was like, all right, I'm going to give this my all. I'm going to act as if this is my real job, because it is now. It's now my real job. And so like I took the Amazon model, right? You begin with something small and you expand it. Amazon began with books, then they became a major retailer. Now they have like Whole Foods, they have like AWS, et cetera, like everything. So I start off talking about uranium, started incorporating gold and silver and precious metals. That's a bigger audience. And then starting incorporating some geopolitics every now and then, because we look at the geopolitics to understand the markets, because the markets are politicized now. So you can't just look at these markets through a naive lens. Naive meaning that you're ignorant of the surrounding geopolitics to it, because you have to. And so by doing that, I was able to attract a bigger and bigger and bigger audience. My reach grew, and now I'm at 64,000 or something. This time last year, I think I was like at 7,000 subs. The year before that, I was like at, I don't know, 700 or 800 or 900 or something, 10 or 1,000. So it's been pretty good growth. And the thing with YouTube is sometimes you have like these big spikes in growth, and then it kind of levels off. So
Yeah, that's what I get.
you're all trying to find how to get back into the good graces of the algorithm. And you can't rest on your laurels. The audience taste is consistently changing. You have to be with it. You can't be like talking about the same old thing that you've been talking about for the last 2 years. You've got to be evolving. You've got to be dynamic. You've got to be aware of the trends and what people are watching. And I think the best way to ensure that is to, number one, be a fan of what you're doing. Because if you're a fan of what you're doing, then you're naturally going to be absorbing the content that you're dishing out to you're going to be a member of your audience, right? So now you're just serving yourself. So a lot of times I just create videos that I want to see. I just
Yeah.
bring guests on that I want to talk to, that I think are interesting. There are some guests that probably could give me more views, but I'm just not interested. I'm not interested in talking to them. Like, just like, so if I understand if I understand myself, and through my audience, or my audience through myself, I can help grow the channel most effectively that way. Because then if you're just doing it just for money, for money's sake, I don't think it'll last long term. You're going to burn yourself out, especially at the rate that I'm doing it, a video a day. So it has to be something that I'm interested in to keep me going.
Thank you so much, Danny, for talking to me today, guys. There is a link in the first comment and the description to his channel. Make sure you check it out. You're going to be seeing the channel on screen right now as well. Capital Cosm is your go-to resource for all the commodities, for geopolitics, you name it. Check out the channel. Honestly, wicked content. I've been a fan for a long time. Me and you talk about emo forever, for the last year at least, probably. So, I love your content. It's fantastic stuff. Keep it up. I check it basically every day. So, fantastic channel.
Thank you so much for having me on. I do appreciate the time, and looking forward to talking again soon.
Talk soon, brother.